On YouTube now. Fantastic. Hello, everyone. It is me, the Kaizen Investor. I am here tonight with my friend Camari Ellis, and we're going to talk about a very important subject, which is life insurance. So, without further ado, let me let my friend in. Hi, Camari. How are you?
Hey, how you doing? Happy Sunday.
Happy Sunday to you, my friend. I'm so happy to have you on tonight.
Absolutely. I'm glad to be here.
Thank
This
you.
is our second go round, right? So am I only person you've had on twice?
Yeah, not true, but it's okay though.
No, I try to be special. I told you I'm an only child. So, anytime I can occupy that only space lane, I'm here for.
But you're the second gentleman to come on.
Okay.
Is that good? Will you take that?
I got to figure out a way to become the third so I could have that.
That trilogy moment.
Yeah.
Hello for everyone who's watching on YouTube. We are actually hanging out live on, I'm sorry, vice versa. We are hanging out live on both spaces. We are multi-streaming. So I'm live on YouTube and I'm also live on Instagram. So welcome to everyone in all areas. Tonight we are talking about a very, very, very important subject, which is life insurance. Many people don't like talking about it. However, it is the most important thing to talk about, especially lately. So I'm happy to have Camari Ellis on with us tonight. I've decided as well to also dedicate this particular episode to a phenomenal woman that we lost this year, which is Cece of the Six Figure Chick. Yes. I decided to dedicate this particular episode to her because when we think about life insurance, we also naturally is aligned with legacy. We want to make sure that we are taking care of our family members and those we leave behind. So with that, I think about Cece because not only did she give to us while she was here, but we still benefit from her work and her beauty now. And she also left the legacy for her family because still to this day, her business is running. Still to this day, yes, I still get emails from her staff because I love her products. What a powerful thing she's been able to leave behind. And so that is the theme for tonight. How can we create tools to make sure that we leave behind something for our families and may potentially benefit from now? So tonight we're going to talk about the nuts and bolts of life insurance in English. Yes, in English. Because here is my bone to pick, which is this. In school, you learn Pythagorean theorem, you learn how to bake a cake, you learn all these wonderful things. But they don't teach you personal finance, and they didn't teach you about life insurance. So we're going to take this and we're going to break this down brick by brick, step by step. Okay. So post all your questions in the chat. No question is a dumb question. This is a learning environment. So Mr. Ellis, the
Yes,
finance rebel, I'm dying to know from you. Can you break down in English what is life insurance?
Life insurance is a contract you have with a life insurance company that says that we will pay you or I will pay you X amount of dollars in premium to cover my life just in case if I die. All right. And in the case that I die, they will pay out what's called a death benefit. The amounts of the death benefit can vary anywhere from $10,000 to $10 million. It just depends on how much you can afford to pay for it. So that's kind of it in a nutshell. The primary reason people get life insurance is to replace income if you are no longer here to take care of your family. So you talked about CC. I'm a big CC fan.
Mm-hmm.
Matter of fact, I just spent some money with her the other day. Was really proud of those purchases, even though she's no longer here. But she's definitely given a lot of value. So I was like, hey, let me make sure I spend my money and put my money where my mouth is. But if she had a policy and she's no longer here, that money would have went to her family or whoever that she deemed the beneficiary. So it doesn't always have to necessarily be family, but 9 times out of 10 it is. You're supposed to have what's called an insurable interest. Again, an insurable interest, meaning that my life, if I'm no longer here, that my life has a monetary value to these people that I'm leaving the money to, and that me not being here will hurt them monetarily. So I'm going to help them out. And you see it in a lot of different ways. It looks like I just left you with a question. Did I talk?
Yeah.
Okay. All right. So I hope I didn't confuse you. I'm not here to confuse.
Yeah, exactly. So we're going to talk about that. So insurable interest. What if a person is a stay-at-home mom how would she be able to, quote unquote, document insurable interest if she wanted to have life insurance for her family?
Oh, that's easy. I mean, being a stay-at-home mom is very valuable. Um,
Exactly.
and let's just for this conversation, let's deal with conventional terms: man and woman,
Hmm.
couple children, and
Hmm.
household. So if the man is going out to work and mommy's staying home, wife staying home, and feeding the children, washing the clothes, keeping the house clean, cooking dinner, all those other grandiose things, grandeur things,
Hmm.
right? They have value. Um, if mommy's no longer there, the husband then has to pay someone to do that. So right there, that's insurable interest. Plus they're married. So there will be automatic insurable interest there.
Gotcha.
Yeah,
So can we go over the basics of what types of life insurance there are?
absolutely. Absolutely. There's basically 4 different types of life insurance. And they all have different variations, and life insurance is always evolving as well. But you have term insurance, which is the cheapest form of insurance. Think of it like the Ford, right? It's there to just get you done what you need to get done.
Hmm.
Right. It's the most cheapest. It does not accumulate a cash value. At the other end of the spectrum, at the most expensive end of the spectrum, you have what's called whole life insurance. It's the most expensive. It's the Cadillac or the Mercedes Benz or the foreign, however you want to call it. That accumulates a life value. Excuse me, a cash value
Hmm.
as well, and it lasts for your entire life. Now, the reason why you might want to have cash value life insurance is because there are some great tax benefits,
Hmm.
and you can also use the cash for other things like retirement planning and things like that when done properly. All right. The 2 other forms of life insurance. Well, let me back up. And then
Yeah.
the way you accumulate cash value and your let's say whole life policy is
Hmm.
based upon the life insurance company's performance. So based upon how well they perform, and they're able to return money to their policy holders, and that's what's based on their cash value. So also a portion of your life insurance premium will go towards the cost of the insurance, the cost to cover you.
Hmm.
And then the other portion of it will go to the cash value as well. So it's almost like a savings account.
Okay.
I don't want to be too cavalier with that because I see a lot of people promote that and it's
Hmm.
done in a very cavalier fashion sometimes, in a very irresponsible fashion. But just for this conversation, I'll come back and clear all that up. You could also look at it as a savings account as well.
Okay.
All
Now
right.
let's. Oh, are you? No, carry on.
Yep. And so then you have 2 others, right? Remember I said there's 4. So
Yes.
again, term is the cheapest, whole life is the most expensive. All right. Going back to term only lasts for a certain period of time. You might have a 5-year term, 10-year term, 20-year term, 30-year term. And again, there's all kinds of remixes of them that they have out there. And
Hmm.
then the 2 in the middle, again, they're both permanent policies. They're both cash accumulative policies. One is called a variable universal life policy. And
Hmm.
inside that variable universal life policy, again, you pay your premium. A part of that premium will go to the actual cost of insurance to cover you. And then a part of that premium will go into stock market investments. Right? So that's one thing you can do. That's probably the VUL, the variable universal life policy, is probably the most flexible out of all of them. So it works because when you have enough cash in there, you can defer and delay payments at times. You can't really do that with
Oh,
some of your other policies. All right. And so the other one is called a universal life policy.
okay.
All right. Same premise. Part of the premium goes to the cost of insurance, covering you just in case you pass or when you pass, because it's inevitable.
Hmm.
Right. And then another portion goes to the cash value portion. And that one is especially linked towards interest rates. And so, how good can the insurance company get on interest rates out in the market?
Okay.
Mm.
All right.
Those are
Now
the
we
4 in term, whole life,
whole life,
variable
variable,
universal
universal
life,
life,
and
and
universal
universal.
life.
All
Yes.
right. Those are the 4.
Yes,
And
ma'am.
basically, that's the Ford, the Maybach. How would you describe variable universal life as a car in English?
So again, the Ford is the term. It's temporary,
Term.
right? The Maybach is the whole life policy.
Hmm.
I would call variable universal life and universal life a Lincoln or a Cadillac.
Okay.
That makes sense.
Yes,
Mhm. The
it
high end
does.
Cadillac.
Now, you said something that I want to make sure is crystal clear. Why is it? She said the term is jalopy. That's hilarious.
Oh,
Clemenza.
yeah. Somebody must be hoopty.
So, with that, I want you to also clarify why would someone get term insurance when there is other types of insurance out there? In what way, in what situations would having just term insurance be beneficial for someone?
So I always advise people to get what your pocketbook or your wallet can afford.
Combined. Okay,
Right.
got it.
And so oftentimes the term policy is more
Affordable.
inexpensive, more affordable
Mhm.
than all the other permanent forms of insurance. And if you're on a limited budget for whatever reason, that's why you might do term. Because I always recommend that a person or a family get their what am I trying to say here? Get their need met first. For example, I advise people with children to try to get $1 million worth of coverage immediately.
Mhm.
But there's other formulas in there, and one formula is you take your salary or your annual income and you multiply it by 10. All right. So if you make your average employee in America makes $50,000 a year, multiply that by 10, that's $500,000.
Got
So
it.
if that's your need to replace your income, because remember the primary reason for life insurance is for income replacement.
Mhm.
You want to replace his income over the lifespan of, say, your spouse or your children and make sure they get whatever they need. Because again, if someone passes away and let's say they have children, well, their salary has just been removed from their household, right?
Yep.
Oftentimes it leads to a life of poverty. And I mean, you could literally see this when people die, but if you want to talk about seeing this kind of in action when people don't die, look at it. Look at broken families or single family homes, especially a lot of times with the women that are taking care of them. They might have separated from their spouse, their husband, whatever, and then a lot of times the man goes off and lives his best life. The woman's
Mhm.
stuck. The woman's stuck taking care of the children.
Yeah.
A lot of that happens in cases of death as well, because women live longer than men.
Yeah.
So, when these things happen, again, everything falls on the woman. And again, for this example, everything falls on the woman, and she has to figure out a way to keep food on the table, get the lights on, get the water running, and keep the gas on. So,
Gotcha. Now, before we continue, can we do a slight audio check? They're saying there's an echo. Is your phone all the way muted on your side, Kamari?
my phone is not all the way muted.
Because is your headphones plugged into your computer?
No, they are not. So let me see what will happen if I turn them down. Because I guess I can just rely on the audio from the headset and just
Yes.
talk. Okay. All right.
Mhm.
Your setup's a little different than mine. Is
I
that better?
know. I know. Hopefully, it's better for my people on IG land and everybody else. So
All
hopefully,
right.
it's
I
good.
apologize for that.
No, don't worry. No worries. No
Okay.
worries.
Can you still hear me though through the microphone and on YouTube? Okay.
Totally.
All right. Perfect. Perfect.
We rocking.
Yeah.
So, with that, my follow-up question is this. What is this? Well, I shouldn't say what is this. Does that mean, because traditionally the understanding is life insurance is to make sure you have something to leave behind for your family members or beneficiaries. So,
Absolutely.
does that mean that a person who does not have children and who is not married does not need life insurance? What do you think about that?
No, that's not what that means.
All
But
right.
I'm using the more extreme case, and
Mm-hmm.
probably a lot of times I don't know the stats for this, but I want to say there's probably more couples with children than there are with not. And don't kill me for that because I can't prove that.
It's okay.
But just from my experience, it typically is. But no, I mean, if you have a long term relationship and you want that person to be well taken care of, whether you're here or you're not here, then you could leave them a life insurance policy, or you can get a life insurance policy and leave them money.
Mhm.
There's a story floating around that I don't know how accurate this is about Mr. Black Panther himself, Mr. Chadwick Boseman,
Mm.
rest in power. But they were saying that he made sure that he married his long-term girlfriend to make sure that she was able to have all the legal benefits to everything in his estate. No
Mm.
children, no nothing. But he just wanted to make sure she was good.
Yeah.
He passed, and he knew he was going to pass for quite some time now. So
Yeah.
it's kind of the same thing with life insurance. And I don't know if life insurance was or was not available in that scenario, but it's the same thing. Money assets, wealth were passed on to that young lady.
Exactly. I have a question here from Tina that I do want to address. She says, what if you want to get a policy on a family member? Should I do a term?
That really, it depends. There are no cookie cutter solutions, right?
Okay.
Gia hears me talk about that all the
I
time.
know.
Just kind of pass around what I call cookie cutter information or
Mm-hmm.
solutions. Everybody's life is different. My life is different from Gia's. Gia's life is different from mine. My life is different from everybody on there. Now, it might make sense to get a term policy on there. Let's say you have a young father who has no coverage. He doesn't have the money to pay. Maybe he's in school, or maybe he's working a low wage paying job, but you want to make sure he's cool for right now until he gets on his feet.
Mm-hmm.
Probably do that and not have it break the bank too much on you and cover it.
Now, what if, once again, let's pretend that I had a child with special needs, right? And I know that my special needs child will most likely outlive me. Is it possible to get a life insurance policy for my adult child to make sure that they're taken care of after I leave, and also for them as well?
So you told me you wanted to keep this really basic, right?
I know, but
No. That's a great question, because it's a question. It's a thing that's
I'm asking
impacting
for
our
a
community.
friend.
No, it's really impacting our community. So
Mm-hmm.
I'm going to give you a little bit of background. I'm actually on the investment committee of a company that handles trusts for special needs children.
Really?
All right.
Okay.
So you have to deal with special needs children in a very special way.
Gotcha.
Typically, you can't leave life insurance to them. And again, the children are on different gradients. They're at
Mm-hmm.
different levels. Some of them are fully functional and they can do things. Some are not. So I'm going to talk about it from the aspect of those who are not fully functional, and the courts would deem them unable to manage their own financial affairs.
Mm-hmm.
So if mama were to pass, the child would not be, or does not have the capacity to manage their own personal affairs. And so usually what they do is they'll put the money into a trust. The trust manages for them for their life, right? And they put it into a trust for a reason, because typically when you're a special needs child, you're able to get government benefits, government assistance, right? And so I want to say the number is 2,500. Don't quote me on that, but I want to say that typically these children oftentimes cannot have more than $2,500 in the bank, or else it could mess up their benefits. It's something around there. I might have the number wrong. And so what they do is, to get around that, they put money in trust. The trust will then take care of their necessities for life, food, shelter, clothing, medical, things like that. But again, it's directed in a type of trust oftentimes. So yeah, if you have a special needs child, you need to do some planning. You need to sit down with a lawyer. You're going to need to draft some documents and make sure everything's okay. And to answer your question, 9 times out of 10, the life insurance will not be left to the special needs child, because again, they don't have legal capacity in order to do it. And so the court will either direct where those funds go, or you can do it with your legal documents, your wills, and potentially estates and durable powers of attorney.
Gotcha. And Parental Wealth was asking, is it an irrevocable trust or revocable trust?
It's you. I'm not a lawyer. All right?
I know he's not a lawyer.
I'm not a lawyer. I don't want no problem.
He don't want no smoke.
No, I don't want no smoke. It's usually irrevocable, but again, don't quote me on that.
Do your due diligence.
Yes, please do your due diligence.
And before we continue, I also want to preface this by saying I am deeply appreciative of Camari coming on. And the other reason why I appreciate him coming on, as opposed to other people who are coming on, who are also just as knowledgeable, is I wanted to find someone who does not sell life insurance, who is not affiliated in any way with any type of life insurance company. So there is no agenda here. There is no selling of products here. Camari is my friend who has experience, because he at one time did sell life insurance, correct?
Yep, people bought a whole boatload of life insurance from me. And I talk about it all the time, because matter of fact, this month, September, is Life Insurance Awareness Month.
Exactly.
So I'm talking about it anyway, because even though I tend to talk about taxes and investments, I believe that life insurance is probably the greatest financial tool ever created. Because
Why?
because you can put You can put, let's say, $25 on a policy today, and it becomes binding. And let's say you don't make it home tonight, the life insurance company is on the hook. Granted that everything's been executed properly, right? Because life insurance companies don't want to just pay money just to pay it. But I'm assuming everything's been paid, everything's up to date. But you could have paid them $25, and let's say you have a $500,000 policy, they got to pay you out that $500,000. So there's no other product that you can do that in legally, that you can do it legally, and have it benefit your family in such a manner.
Got you. So now I want to delve in a little bit deeper because many people who we engage with here on social media are business owners, and many of them are like myself, right? They have their business or they have their side business on the side, all the while having their life insurance policy from their main employer, right? For example, I work full time and I also have a business on the side. So in that situation, for me, I'll use myself as an example. I do receive life insurance from my full-time employer.
Good.
Yeah, I do. However, for those who also have a small business, is there a way? What does it look like purchasing life insurance as a small business owner? Are there any benefits, or is there any tactics that works best for them?
Yes and no. So let's break that down a little bit, right? So you have a life insurance policy through your job. They cover it. You're able to get the group coverage. They don't do as much underwriting, so it works great, right? However, if you leave that job, typically your coverage goes away.
Exactly.
Sometimes you can port that policy, what they call port, meaning just take it from your job and then you own it individually from their job. I do also recommend that you have your own personally owned policy as well. Now, however, there's a caveat. I do suggest people max out whatever life insurance they can get on their job.
Okay.
Because typically it's going to be the cheapest. There might be some tax ramifications for it, but usually it's the cheapest you're going to get, or the most price effective that you'll be able to get. And again, if you have any health issues or anything like that, life insurance becomes a bit challenging to get placed on your coverage on you. But under your employer, you don't have that same issue. Now, to answer the question about being self-employed or in a business for yourself, you have to be able to oftentimes substantiate how much money you make. So life insurance people aren't dumb. They know there's a lot of scammers out here. There's a lot of people that like to get over out here. They know there's a lot of people that lie on their applications out here. So, sometimes if you're not able to, it depends on the cost of the policy or the level of death benefit. But if you can't substantiate why you need that level, or it's a bit high or exorbitant, they might want you to show documentation as to why you need this. So, for example, let's say you're a small business owner and you only make $25,000 a year in profit. All right. And then you're applying for $1 million in coverage. Now, remember, I just told you about that whole test about the times 10, the multiplier of times 10. Well, technically, you probably only need about $250,000. Now, I could complicate this a little bit more and get more technical, but I don't want to, because that multiplier can flex up and down, if you get my drift.
Yeah, but let's keep it basic.
Yep. But they're going to say, well, why are you applying for $1 million when you only make $25,000 a year? So, they may want to see your tax returns. They may want to see bank statements and things like that. That's when the coverage gets a bit more tedious, because again, life insurance companies are in the business of making money. All right. So they make money the longer you live. So they don't want people who necessarily are going to get coverage and then they're going to die 2 weeks from now. Even though, like I said earlier, if you pay that premium, you can benefit from it. They want to do health screens and make sure that you are in pretty good health and you're going to live. If that is not the case, then your premium will go up. That's why it's also important to get coverage as young as possible. Most times your lifestyle may change, your life circumstances may change. For example, let's say you're 25 years old, just graduated college, have no children. Great time to buy life insurance because you're young. A lot of times you might not have any health issues, no high blood pressure, no diabetes, things like that. Now, typically, right, we know there's exceptions to the rule. That's a great time to get it. Now, you add 5 years onto that life, 10 years onto that life, you're looking at something totally different. They might have high blood pressure at that point.
Yeah.
They may not be able to get coverage, or they may not be able to get preferable coverage, because life insurance also will price your premiums on a gradient as well. So if you're in great shape, you can run far, you got a great heartbeat, you have low blood pressure, they'll give you some of the best rates. Again, because they're not expecting you to transition and go on with the ancestors anytime soon, right? But if you are, 40s and 40s, and you don't have much hair, and you like good food, your policy might be a bit more expensive, right? So you want to think about some of those things.
Gotcha.
The earlier you get it, the better.
Gotcha. So with that, I want to follow up with Tina's question here. She wants to know, how do you feel about insurance? I'm sorry, how do you feel about the insurance the banks offer?
Typically, I don't like them. Typically, they're overpriced. Typically, what they're doing is they're reselling insurance from another life insurance company. So they're just a glorified agent a lot of times when you read the fine print.
Gotcha.
Yeah, because banks technically are not in the life insurance company. So when they're offering you it, they're offering it from some other company, whether it be a MetLife, a Lincoln Financial, a Sun life insurance company, or any of the big ones. Any of the big ones.
Now, I want to break this down as well. How does one go about shopping for life insurance? If we're shopping, once again, I like clear and simple illustrations. If I'm going to the store, I'm going to the grocery store. Everyone needs different things in a grocery store. All right. Let's be honest here. Life insurance are products, right?
They are.
Okay. So since they are products, how can we kind of narrow down and look for a product that might suit us best? How do you know what you need?
Most people don't. I mean, I just gave you some great gems. Hopefully,
yes, you did. Yes, you did. Yeah.
Right. And so I'm going to be totally transparent, right? G will probably tell you this. You might have heard me say, I hate the financial services industry.
Yeah.
Right. My name is the Finance Rebel, but I hate the financial services industry because it can be predatory at times, because it's very, very, very sales driven. And what I mean by sales driven is that they are actively trying to sell you a product, whether you need it or not. So I've worked at places where I've met agents, life insurance agents, that would predatorily, I would say, sell a product to somebody because they knew all the emotional buttons to push. They knew how to pull on those emotional heartstrings, and they knew how to separate people from their money in their pocketbook and their wallet. With that said, well, let me answer your question, right? So you can go online. There are online brokers where they will shop your policy with multiple insurance companies. You can also find individuals as well that will shop your life insurance with different companies also.
Say that one more time, sweetheart.
You can find companies online that will pull quotes from different life insurance companies.
Okay.
So more than one, right? And so what happens is you'll have the companies and then you'll have the individuals. Now, many of the individuals tend to favor one or two companies because that's what they know the best. And most life insurance companies are the same for the most part. Right. And so, they might know anywhere from 5 to 10. There's no way anybody can know all the life insurance companies. What you want, though, is you do want to try to get as close to objectivity or fairness as possible. And you want to get quotes from multiple companies of the same type policy. I'm going to warn you, I'm going to tell y'all which policies get paid the most. Take a guess. That Maserati that you talked about.
That Maybach, that whole life one.
The whole life policy gets paid the most. But it's also permanent. It also accumulates cash. But you will see a lot of agents sometimes try to sell whole life policies. Whether it will cover the entire life insurance need of the individual or not. I've seen that firsthand. It makes me sick. It makes me nauseous, but it happens.
I need you to roll that back. I need you to roll that all the way back, babe. Because you just said, correct me if I heard you wrong, that a salesperson could sell whole life insurance, even if that whole life insurance does not last the life of
Well, it
the
will last a life, but it might not
okay.
be the best, right? It might not. So remember I said you should try to get at least 10 times your coverage,
Yes.
right? All right. So when you get 10 times your coverage on a whole life policy, that's going to be way more expensive. That's
Sure.
going to be way more expensive for your average consumer who's
Hmm.
out in the market shopping for life insurance.
Okay.
However, you probably can get term insurance and be able to at least get the coverage you need. Again, it's temporary, right? So let's say you're married and you have some children and you want to make sure that and again, your children are relatively young and you want
Hmm.
to make sure that God forbid you don't make it home tonight, that your children and your wife will be okay. They don't have to add the burden of thinking about money and paying the bills and making the ends meet and all that. So you might say, you know what, I want to make sure everything's cool for the first 20 years of their life.
Hmm.
So they get to college, there'll be enough money for college to pay the mortgage, keep the lights on, get clothes, things like that. However, what happens after that time passes? Because what happens after a term policy expires, the premiums go up.
Yeah.
That actually happened to me, and I
Hmm.
sold a boatload of life insurance, and I had an old term policy, and I forgot about it, and it just ballooned after it expired, and I didn't port it, or I didn't convert it rather to a permanent form of insurance or permanent form of life insurance. So then the policy would just skyrocket. And it skyrocketed to something crazy. I think I was paying like $50. And then I started getting invoices for like $450
Oh.
life insurance carrier. It's my fault though, right? I have to be accountable, right?
True.
Yeah,
True. True. True.
I have to be accountable. But you know, and again, those increments when you get term, again, it could be 5 years, 10 years, 20 years, 30 years. But again, after that time is up, 9 times out of 10, you're going to have to get a new life insurance policy. So, you know, going back to the point that you had the question about whole life, is that somebody will try to sell you, let's say, a $50,000 whole life policy
Hmm.
because it pays a greater commission
True.
than that $500,000 term policy because the cost is higher. So, you know, those are all things you have to factor in and think about.
Okay. Now,
I hope that wasn't too lengthy.
no, it wasn't. It wasn't. Chris Monroe wanted to say, he said, whole life is best for cash accumulation and term life is not best. Is that true?
Well, term life typically, there's a couple out there, but term life typically doesn't accumulate cash. So that's
Can you
true.
clarify that? Can you clarify what do you mean by accumulating cash?
Okay.
Literally, baby
Yeah.
steps.
So you literally, when you get a whole life policy, let's say your policy every month is $100.
Mm-hmm.
Right. Let's say $50 of that goes to your overall coverage.
Yes.
Other $50 goes into a fund,
A
right?
bank,
A
almost,
bank
quote unquote.
inside of your life insurance policy,
Mm-hmm.
and it can grow tax free. And there's ways to pull it out tax free later on in life if you live long enough and you want to retire and pull some of your benefits out. So
Right.
there is a lot more flexibility in terms of growing wealth and savings over that time. Term doesn't typically grow any kind of cash. So the money you put in, it covers you, right? And that is a benefit, but there's nothing else to it. That's it. So that question that Chris put up there,
Mm-hmm.
he's 1000% correct. However, the products aren't exactly the same. So all there's different levels of life insurance product out there as well.
Now, here's my follow-up question to that. How can I go about, is there any website or resource that you know of that allows a person to shop and make sure they're looking at policies apples to apples?
Yeah,
Because what is it, darling? What is it?
I don't know. Just Google life insurance quotes.
Just
You
okay.
can do it. Yeah, you can do it. I think there's one called AccuQuote. There's a few other big ones out there. And again, they have the technology will pull pricing. They'll pull pricing from all of the companies, and then what they'll do is you'll go through all the paperwork, and then if they require you to get medical
Hmm.
information, they might send the nurse out or a paramed to pull urine or
Hmm.
blood. Sometimes they might pull your medical records. Listen, never lie on an application though, because if you lie on the application, they find out you lied, they could deny paying you any coverage. So you're signing a binding document. The document, it's a contract. All right. So you just got to keep that in mind.
Mm-hmm.
People love to lie. People will lie about drug use, um, uh, uh, about riding motorcycles, about flying planes. There's like all kinds of things that life insurance companies want to know about because they want to price it. They want to price your policy and your premium appropriately, or they may not even want to extend coverage to you at all.
Man.
Yeah.
Wow.
So actually, when we were kicking around ideas the other day,
Mm-hmm.
I'll probably do a life insurance masterclass at some point also,
Mm-hmm.
because I have a really, really good friend of mine who is a super duper high ranking underwriter. I can't put it out there publicly,
Of course.
but I can't put him out there publicly, but he's agreed to help me and answer some questions and talk about the process, like really get under the hood
Yeah.
and kick the tires on that. So that'll be coming up
Very
soon as
beneficial.
well. Yep.
Enchanta 487 says, do you think whole insurance amount plus higher amount term insurance is good or not?
Again, let's get out of good and bad, right?
Yeah.
It's just what you need, right? It's almost like saying,
Which brings us back. I hate to say it, but I'm here for mi gente. What brings us back to the question, how do we know what we need? Because I want to make sure that I am an informed consumer before I go out and shop.
right. And so we never put a period on that, right? I was talking about going to the internet, and you can find companies on there. But I really suggest you find a good person that really will be, because life insurance can be very complicated, but a good person that will really walk you through the ins and outs of life insurance. All right. That's what I recommend. I know it's hard, but there's some good folks out there. Some of them are financial planners, CFPs, certified financial professionals, or certified financial planners. Some of them are just plain old life insurance agents that really know their craft, understand the policies, and to understand what you need.
Gotcha.
But I would suggest trying to find a person, and that will help you walk through it. And typically, the people that have been around for a long time, and they kind of have a planning first perspective on things, typically are the people you want to deal with. And how do you know that, right? Right? How do you know that? So anytime somebody comes in and they met you for the first time and they say, you need a whole life insurance policy, terrible, kick them out, get rid of them. Why? Because they haven't taken the time to get comprehensive data on you, right? They're just surface level. They just want to sell you something. The first thing they want to do is sell you something. And that's cool sometimes when you know what you want and you know what you need, but you don't know what you want and you don't know what you need. So that's a very dangerous situation. It's not like car shopping when you might have read consumer reports for 10 months and read and watched all kind of YouTube videos about the car you wanted, and you want specific horsepower and the handling package. Like, you kind of know all that up front. Most of us don't have that level of interest in life insurance. Right.
No.
We probably put folks to sleep.
This is true. This is very true.
I'm just being honest.
It's true.
Yeah. So yeah, I would try to find somebody who has a great reputation. And a lot of times you can rely, excuse me, I'm getting tongue tied tonight. You can rely on good referrals. But again, I think that's the telltale sign when people are just ready to sell you something, ready to separate that money from your pocketbook and your wallet. Again, that is a telltale sign.
Gotcha.
Yeah.
Now,
All about the transaction. They are not about the relationship.
That's real right there.
Yep.
That's a good one. You touched on it earlier, but just to help our friend Tamara who's watching, she says, so what happens when your term is up? I have a term policy for almost 30 years and I don't want to lose the coverage.
So you can convert it. And that was kind of the situation I was explaining to that one.
Yeah.
I forgot about it. I was paying the premiums and I just forgot about the term where it was going to expire. So you actually, and I was guilty of this. I didn't do this. And like I said, people brought boatloads of insurance from me, but again, I just forgot. You should actually at least once a year go through and audit all your stuff. And when I say all your stuff, I'm talking about all your financial stuff. What kind of insurance you got, what kind of life insurance you got, what kind of property and casualty insurance you have. Like, coverage for your home. If you have jewelry, you might need to buy riders. I know a lot of people are very, very, very hot on precious metals these days. When you buy precious metals, you should let your homeowner's insurance or your renter insurance know that you have these things in your home, because you're going to need an additional rider, or else they won't be covered. So if somebody comes and robs you and take your stuff, you won't be able to get compensated for it to get it back. Right. So you should go through, look at these things once a year. Look at how much insurance you have: life insurance, disability insurance, renter's insurance, automobile insurance, and make sure that it covers your need, and obviously something you can afford, right? Because we always got to try to make sure that we're not spending all our money on insurance.
Yes.
And make sure that we can cover all our other needs in life. So,
well said.
But you want to go over it and you want to look at those things. And you do want to start to get, if you're really serious and you're really on a wealth journey and you're really thinking about legacy and generational wealth for the next generations, and you want to take care of your children, children's children. What is that? Proverbs 13:22, I believe it is. A good man or a good woman takes care of their children's children. Yeah. You really want to start getting on this stuff. Again, I know it can be boring. I know it might be like watching paint dry and watch grass grow, but it all makes a difference in the long run. It all makes a difference in the long run. You also want to look over your beneficiaries, right? So if you have a life insurance policy, you get to designate who the money is going to go to. Again, God forbid you transition. I've seen situations where people had exes and they got remarried, and guess what?
Oh my.
Beneficiaries, and the ex got the money.
Oh,
so just imagine how your soul is resting in that grave or in that urn if you chose to get cremated. It's probably not sitting too well.
Oh my. Yikes. Right? Just yikes to that.
But it happens. It happens a lot. We're human, right? We
make
mistakes, So, I would check up on all those things. All those things.
Now, Enchanta made an excellent comment. She first asked, I think you already pretty much answered it, about having insurance that benefits not only your children, but also grandchildren. And she also shared that she read that Master P's grandfather left him funds from a policy and he grew those funds.
Yeah, Master P got $10,000. And I want to say he used that to invest into his store, his record store when he was in California. I can't remember the town he was in. Wow. But yeah, that's real. There is I'm a big Master P fan, right?
Me too.
Percy Miller, right? Own some stuff, folks. It's always talking about ownership and creating products so you can sell something, right? But BET did a great expose on him. I would suggest everybody.
I did not see that. I'm glad to check that out.
Yep.
All right. Can we go into a little bit? It kind of coincides with what we just talked about. Some of the living benefits for those who purchase life insurance policies that do accumulate a cash value. What are some of the living benefits they are able to utilize after their policy has matured?
Again, you'll have cash value inside of it. You can use it for retirement planning. There's a big concept out there right now called infinity banking, or creating your own bank, which is done with the whole life policy. Concept is fine. Sometimes the people they market it to, I'm a little weary about. But you can do a lot of things with your life insurance policy. Like there are people out there saying to use your life insurance policy as your own bank. So instead of going to the bank when you want to buy a car, get a car note or get a car loan, pull the money out of your life insurance policy.
So you can get a loan from your insurance policy
if you have enough money in there.
Okay.
It's all about everybody's individual situation.
Of course.
And so you can put money into your life insurance policy. Again, the life insurance policy will grow and it will grow tax-free. Depending upon which permanent plan you'll have. Some policies you can put the money into the stock market and it can grow, or it can just be invested with the overall life insurance company. But again, you can pull it out to supplement retirement. You can pull it out to pay on a home or buy a home. You can pull it out to buy a car. You can pull it out to do anything you want. as long as you operate with inside the law and inside the guidelines and rules of the life insurance company. So, there's a lot. There's a lot.
So in light of, hypothetically, I'll use myself. Okay. Let's pretend I had a whole life insurance policy that I've had for the past 10 years now. Okay. And so let's pretend that the cash value of that life insurance policy as of now is maybe $200,000. Okay. So 2020 hits, Corona's here. I lose my job. Am I able to pull out a small fund of maybe like $50K off of my insurance policy to take care of my monetary needs?
Yes, potentially, yes. Yep.
Okay.
Now there's some other thing like, and I don't want to get too technical.
I know.
Surrender value. Because
don't go down deep. Don't go down that rabbit hole.
I do want people to understand this though, right?
Yes.
Because I've seen people sell life insurance and they don't. Life insurance and annuities. By the way, annuities are another form of life insurance, but it's used like an investment. But yeah.
Carry on.
All right. So I just want to let people know, let's say you're in the first typically 1 to 7 years and you have money built up into these life insurance products, you typically can't pull 100% of the money out.
Okay.
All right. So let's say that $200,000, you might only be able to get $150,000. And then the life insurance company will charge you a fee. Everybody, they have what's called surrender schedules. It's different. But again, that's something I want everybody to at least be familiar with, because I've seen a whole lot of people get their feelings hurt when they want to go pull money out and they couldn't get back all their money that they felt that they were entitled to. Right. So again, not trying to be super technical, but I, just want to give you kind of clues on what to kind of pick up on and ask questions about. You should be asking everybody, if you have a permanent policy, what's the surrender value want to be, or what's the surrender schedule?
Gotcha. So let's continue on that track. As we go along looking for the right people to do business with, i.e. the right people to purchase life insurance with, what questions should we be asking them to vet them?
I would ask them what their philosophy is on life insurance. And again, if they have any one favorite, and listen, people can have favorites, right? That's fine. But when they lean only to one thing, I would say that's not the person you want. Listen, I tell people all the time, there is no bad financial product. There's only bad financial strategy. So for me, you want to lean towards people that can provide you good financial strategy and which products to use or what products not to use. And so that's a whole different beast, right? Because you have some people out there who are just selling, but then you have a class of folks who are advising. It's totally different. It's totally different. And that's no dispersion to salesmen, right? Or saleswomen, because you have to sell, right?
Yeah.
To me, the best salespeople are the ones who inform you and educate you the most.
Gotcha. Look, I'm taking notes as we interview. I really am. For anyone else who has any more questions, you can put them in. Excellent question, Shanta. She wants to know, can we name our children or our grandchildren as our beneficiaries on our life insurance policies?
So if they are below 18, typically no.
It
needs to be an adult. And I'm assuming, but after they're over 18, yes, you can absolutely do that. If you're able to get away with it, usually life insurance companies won't allow you to. But if you do name your children, your minor children, as beneficiaries, and let's say you were to pass, and I'm gonna use my own situation. Right? So I'm married now. I have 2 children with my current wife. I have one child, my oldest child, from a previous relationship. And so he's not a minor anymore, but he's grown. Let's say when he was 10 years old, I got a $1 million life insurance policy on him or myself, and I named him a beneficiary. And if I were to pass, guess who would be in control of that money?
Him, I'm assuming.
He's a minor. Minors can't.
His mother.
Right. And so let's just say I don't have the best relationship with my baby mama.
Mhm.
or his mother, right?
Yeah.
I'm not going to be too loose there, G. I'm just saying. I'm going to bring it on to the people. I want them to get it,
Let them know.
get
Let them know.
it, right? But if I don't like her, if I don't feel she has is the most financially astute or
Mhm.
responsible, that's who I'm leaving my money to, for the most part. Now the courts may step in and they may choose to do something else, but as his guardian, she can have a say to some degree or another, and that's something a lot of folks don't think about. So you definitely want to think about that. And listen, I'm not gonna pick on the ladies here, right?
No, it's okay.
The men, it could go and flip, right? So if your baby daddy, you don't like your baby daddy and you don't think he's responsible, well, you probably shouldn't leave money where he might be able to get access to it.
Well, then in that situation, once again, hypothetically, in that situation, would be best to put that policy in a trust?
Potentially, but people like to run around and talk about trust and talk about LLCs. Trust can be expensive. All right.
Yes, I agree.
Trust,
Yeah, they are. Yes,
trust
and they are.
trusts have to do tax returns every year, right? People never talk about that. And so if you don't have the money to fund a trust and to keep it funded, by the way, it's not a whole lot of money, but again, if you're working from the bottom, you're coming from the mud,
Yeah.
and you're trying to, work your way out, a trust oftentimes may be an extra layer of complication on top of what you're actually trying to do. So
Got it.
you might want to leave the money to Nana or my mom if you trust them to do what needs to be done. There's also some other legal estate planning things you can do. I'm not a lawyer, so I'm not going to
Mhm.
really talk about them too much, but
Mhm.
there's other things you can do. But, at the end of the day, I just want to make sure you understand the ramifications of some of these decisions.
Got it. Now, what if you have someone who does not have any children, and is it possible to make a beneficiary of your trust, not trust, excuse me, of your policy to a entity? Meaning for me, if I wanted to, basically, I want to make sure, is it possible to have a beneficiary be like a nonprofit organization?
It happens all the time. There's a whole area of planning or financial planning called charitable giving. And they do that all the time. When you see people leave get their names on buildings or leave these big endowments, you know how they do it? They do it through life insurance. They'll go buy a big
That's
boatload
awesome.
life insurance policy. They pay pennies on the dollars on it. And that's how they get their names on wings of buildings. Not always, but a lot of times. That's how they get their names on buildings and things like that. Life insurance is very powerful when used properly.
Now, of course, we're about to wrap up pretty soon. If people want to learn more information like this, not about products, but about the power of understanding life insurance,
Mhm.
what resources and books would you suggest they delve into?
That's a great question.
I know. Look at that library back there. I see those stack of books.
No, that's not a lot. That's just a couple of books I keep around because I talk about them. I'm trying to think because I learned a lot of this. This was all on the job training.
Of course. Yeah.
But there are some books out there that talk about like how the Rockefellers and the Kennedys use life insurance to
Yeah.
perpetuate wealth
Yes.
from generation to generation. But I can't think of any. You know what? Let me look at my Audible. There's one book that's coming to mind, but I can't think of it.
In
Uh,
the meantime, okay, while you're saying
sorry. Okay, go
that,
ahead.
no, in the meantime, for those who are watching, a wonderful article that I benefited from, also preparing for tonight's interview, was actually by Black Enterprise. It's called Wealth Building Strategies from Life Insurance. So
Mm,
once again, that's Wealth Building Strategies of Life Insurance by Black Enterprise. That was really, really helpful.
Look at you
Very, very.
being a great journalist.
I don't play games. I'm here for the people. I'm here for the people. I'm here for the
I don't play games with you. Like, come on, don't be running your jokes over here.
It's true, though. It's true because the more informed we are, the better we can make informed decisions.
Absolutely.
And so, and once again, it's the whole idea of this is not something that we talk about at the kitchen table.
It should be though.
Yes, it should be. It
Mhm.
should be. Um, And as you mentioned earlier in one of your lives, which is I want to make sure people know that there's more options other than GoFundMe. Okay? I need to make sure my people know that. I need to make sure that they see the benefits, the flexibility, and the resources that are available to them. And for myself as well. Because to me, what the people don't know is that this is my free consultation with Camari, just right here, right now.
AKA, she just pepped me out, y'all.
Yes, I did. I totally did. But thank you so much for coming on, Camari. I appreciate it.
My pleasure. My pleasure. Thank you so much.
I deeply appreciate it. And look, what I am going to do is I'm going to make you have homework. Can you believe that? I'm giving you homework, sir. I am. So, yes.
Give me homework. I'm still brushing my teeth with my left hand.
I'm proud of you.
That's not good enough homework.
Oh, we have a couple minutes left. So your homework is this. If you can hit me up by a text message or email with any book or website for my people so they can learn more about insurance, I would greatly appreciate it. And I'll just spread it on IG.
Let me write that down.
All right. So my beautiful family on Instagram, I have the timer going off. So I have a minute left. Now, if you enjoy this interview and you have benefited from it, please do me a solid favor. Click the link in my bio and subscribe to my YouTube channel. That is where this video is going to be housed. I will not be saving it here on Instagram. So once again, click the link in my bio that says YouTube channel, subscribe to my YouTube channel, and then you'll find this wonderful interview with Camari Ellis, the finance rebel. So thank you so much for hanging out with us. Camari, thank you so very much. And with that, good night, everybody. Bye. Let me end this here. And goodbye, guys. Good night.